the Taiwanese index, which is up 3%. We have the Hang Seng, which is higher by 1.6%.
So you got to cross and get past this 24,350 to 24,686 levels. One by one.
Decent set of numbers coming through. A revenue growth of 10.5% is what the company has clocked in.
So 24,373 is where the Nifty is starting.
If you look at the mid-cap and small-cap indices also, they are down hardly 3 to 4%.
Big day for Bhavish Agarwal and the entire team at Ola Electric.
We could ride, 1 or 2 quarters of underperformance.
First 2 hours of trade have been very, very steady.
While the numbers look stable on a month-on-month basis, it's a slight decline that we are seeing in terms of equity inflows in the month of July.
Ola Electric story is a story of India's future.
It is a day where we are seeing green across our screen.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar and with me are the boys, Nigel and Mangalam. This is a good Friday, right? It's been a manic week, levels all over, extreme volatility. Sometimes you start higher, but you end lower. But this one's been a steady, strong session. No complaints.
Well, that's right. I think I was breathing a sigh of relief from around 11:30 a.m. Why? Because the Nikkei shut. Okay. And the Nikkei shut higher. Okay. And for all the talk about the Nikkei, it ended down a little more than 2%, after being down 12% in the first trading session on. So it wasn't such a bad week at the end of it. The start of the week was really fearful, but all's well that ends well. So hopefully we're on track. Hopefully we're on
Europe, the CAC is down less than 0.1%. The DAX is down less than 0.1% for the week. So for them, it's as if Monday never happened.
And Dow Jones the futures is still higher by about 0.8%. So we'll keep an eye out on that. But the one thing that I looked at from midday sometime around with the Trent numbers, phenomenal numbers. It's a gravy train that continues to move on, right? You look at the Trent stock over the last 1 year, it has doubled, 4 times. It's moved 4 times. The last 6 months, it's doubled, but in the previous 6 months also it's doubled. It's been what a wealth creator.
Indeed. Well, I'll tell you what, we want to know more about Trent. For the time being, let's get Mitesh into the conversation. Hi, Mitesh. Good afternoon. Well, on the entire week, Mitesh, when you've been joining us, I've been saying, Mitesh, the start was in the green, but unfortunately today we're off the high point of the day. Today is a good session. We're virtually at the day's high. What do you think? Are we good for more?
I think today is a good session. Today is also Friday when the week ends. But the question of are we good for more is very important. That evidence is still missing from the setup on the indicators and the charts and the way the moving averages are positioned. I think what we can say is that 24,000, which has a good open interest as well. It's a round number. It's got some good port open interest. I think 42.5 lakhs was there since sometime in the morning when I checked, and maybe some more would have been added. So there is some support coming in over here. But if we don't get past 24,400 and then 24,600, 650 zones, then I think we might come back to test 24,000 and maybe next time break it. But let's see. For the timing, it does look like a market which will see a lot of supply at higher levels. So sell on rallies is the strategy on the index. But on stock side, yes, we've been exploring long positions, even trading with long biases. But, to hedge that, you either buy into put options of the Nifty or sell some out of the money call options. I think that's the way we'll approach it. On the stock side, Bajaj Auto,
Go ahead, Mitesh.
Bajaj Auto could be an interesting bet. I think, it's had a swing pivot of 97, 50, 60 in the last 4 or 5 weeks on multiple occasions. Sorry, it's trading right there. So a break about 97.70 should invite long positions. Then keep a stop at 97.20 and look for targets of 9900. And Balkrishna Industries is also trading at a support level. The structure is weak. So I would, look at shorting this in case we see a break below 3090. If that happens, take a stop at 3135 and look for targets of minimum 3,000. But I suspect 2930, 2940 is where the stock can head to.
All right, Bajaj Auto and Balkrishna Industries. I wonder what your thoughts on Trent would be. But for that, when we come back to you in about half an hour, just looking at the way the markets move, Nigel, it may appear as if towards this latter half of today's show itself, is there a case for some short covering? Because the FIs have, unwound nearly all the excess longs that were there. It's at an even keel. And next week, Thursday is a holiday. So it's only on Wednesday where you have both the Nifty and the Nifty Bank expiry. So let's see how that pans out.
Well, and the clients have gone net long, right?
Yep.
So that always the swing factor of around 1 lakh contracts from last Friday to this one. So I think for the Nifty bank, that 50,750, that's the important mark. For the Nifty, we've already almost got past the resistance zone. So if we end around here and if we have a positive close, I think the Nifty bulls will feel good getting into Monday's trading session. But the Nifty bank, you'll want to close at around 50,700. But you want to tell us more about Trent?
Let's tell you about Trent. You know, it's a big mover in today's trading session. Up 10% today, but over the last 6 months has doubled. Over the last 1 year has moved 4 times. And it continues to surprise on the upside. You know, valuation concerns, everything on one side, and you just look at the results. The street was working with a number of 3,800 crores on the top line. The company goes ahead and reports 4,100 crores, so that's a beat out there. The EBITDA comes in at around 612 crores versus expectations of 588 crores. The net profit as well, the street was working with a number of 340 crores. The company is reported around 391 odd crores as well. This does not tell you the entire picture. In a quarter which was weak for consumer sentiment, the revenue has grown 56%, EBITDA has grown 66%, and the net profit 135%. So, if you're looking at a stock which trades over 100 times and the EPS doubles every time, then maybe 1 year forward, it's trading at around 60 times itself. That's what the street is looking at. The like-for-like growth also, a high base. Q1 FY23 was a 63% base. Q1 FY24, 31%. Q1 FY25, like-for-like growth of 22% far exceeds all the other retail companies that have reported their numbers so far. They've added 6 Westside stores, 16 Zudio stores. Their total number right now on Zudio stands at 559. A few years when they started Zudio, it was just an addition to Westside. Now Westside has become the sideshow. Zudio is the main story here. Their fashion concepts registered double-digit LFL growth. Beauty, personal care, innerwear as well as footwear, which are their emerging businesses, are now 20% of their sales. Good margins out there too. Valuations, like I pointed out, 120 times 1 year forward earnings, but if it's growing so fast, we may see rebasing of the earnings expectations and perhaps the valuations hold on. The most important trigger that we'll be watching out for won't be fundamental, but will be technical, which is, does it get included into the Nifty in the next round of announcements that come by for the index inclusion itself? And if it does, then that adds another set of flows that come into Trend. So what a story this has been. I mean, the only thing that rhymes with Trent right now is trend, and it's been a trending stock.
Well, you contributed last quarter?
No, not to the Zudio thing. Maybe a little bit to Westside, but Zudio, unfortunately, the way they are placed, they don't have as many stores.
Basically, it doesn't come in your pin code.
It's not in my pin code, and pin codes around me as well.
I contributed to Westside.
You contributed to Westside,
because
right?
I went for lunch at the Dadar outlet, and I was waiting. So in the meanwhile, went and bought a couple of shares.
I'm sure Rima would have contributed a lot to Inditex, which is the Zara vertical. Out there also, there is another announcement that has come by. So they hold about 3.2 lakh shares of Inditex in the Zara joint venture. Zara guys had asked them for a buyback, whether they want to tender their shares or not. The companies announced that they would tender about 1.5 lakh shares at a price of 7,500 rupees. So basically, through this tendering, they will get additional 105 crores as well. So there you have those graphics up for you. They will tender 1.4 lakh shares of Inditex Trent, which is an associate company, for about 7,500 rupees per share. They held about 3 lakh shares. So needs to know what happens to their stake in the joint venture. But as of now, 105 crores additional coming to them with the growth that the company has been posting. Quite good.
And Trent doesn't sell any other brand clothes, right?
No,
it's only their own. They don't even distribute nothing.
Yeah, because it's not as margin accretive to sell other brands,
so that explains their very high margins.
Supplying, sourcing, etc. And the only difference between Trent and all the other retailers, if I had to sum it up in one line, would be that all the other retailers sell brands that become stores, whereas Trent sells from stores that itself become brands. So, instead of buying a Reebok branded thing from a Reebok store, you buy something from Westside. So you think of stores and not just the brand, and then what you bought from becomes the brand.
Okay, let's ask Gurmeet Chadha. Gurmeet, everyone likes Trent, but everyone's waiting for an attractive entry opportunity which doesn't seem to come. This is, a stock which just keeps climbing higher and higher. Current levels, what do you do?
No, I think this one stock has actually defied gravity of valuations, I would say. But also, I think the business performance has been very solid. I was looking at some very interesting stats. If you see, obviously, it started off, as Mangalam said, inside that Star Bazaar, right? And at some point of time, it was named Zudio. Today, for example, it's selling almost 90 T-shirts every minute and, almost 20 pairs of jeans every hour. That's some phenomenal number. The brand itself has now grown to upwards of 7,000 crores. And it defied whatever even the market was expecting. So somehow seems to just keep, and this is when we had a heat wave last quarter. We saw the number of Aditya Birla Fashion and other, lifestyle brands, including Bata, etc., although not strictly comparable, creating that impact of last quarter. So I think it's a phenomenal one. But as I said, I agree with you. Any decent correction, the stock is almost more than 100% up already this year YTD, despite valuations being very stretched. I think one category I'm watching out is that while it continues to do well across fashion formats, I think there are a lot of emerging categories like beauty, etc. now, which are now accounting for 20% of the top line. So I think if they can diversify a little more, I think that's when you can start justifying a little bit high valuations, and probably some news of inclusion in Nifty is also helping its cause.
Right, Gurmeet, what do you think of Ola, the listing today?
As I said, I think here you have to be a little more patient because these new age businesses require very different lens. I maintained this when Zomato came, when a lot of other new age businesses came. I think for it to really get into big numbers, I think you should now start looking at, can it multiply the volumes by 5-6 times? And that's when, some kind of, earning visibility would come. Also the local ecosystem, right? So for example, in China, if you see, cattle is 50% battery market share. Even Tesla takes battery from cattle. Today, now GM has signed, right? So the local EV system in terms of the fuel cell and other needs to be, developed. And it's not just, the electric mobility alone. And I would want to see one full warranty cycle, playing out from the vehicles launched from 21 onwards. And one edge a TVS iQube or a Bajaj Chetak has, if you see TVS iQube is now clocking 2 lakh units a year. Ola is upwards of 3 lakh. Chetak is now also touching about 1.2, 1.3 lakh units. Is that their ability to generate cash flows and deploy here? Ola is a pure play EV. So I think the traditional guys, in my view, with the distribution reach and the cash flows they have, in my view, have a slight advantage over Ola.
The reason why I asked you about Ola and the new age company is because I remember when Zomato listed, and there were a lot of other new age companies listing as well, it said that the best way to play this theme is via to have a portfolio of stocks and then hope that some of them actually stand out right, because the business is evolving as the investors are when they look at these businesses. So does Ola fit that little portfolio of new age stocks that you are looking to build?
May not be immediately. I think we got lucky with Zomato. We have Policy Bazaar, which I consider. In fact, if you ask me, Jio is as new age as anyone in terms of Jio Financial and eventual listing of Jio as and when it happens. And we are looking at some of the other names also, but not yet. As I said, I would probably wait for a few quarters and see if this number picks up. So if you see the overall EV sales, even in scooter segment and bike segment, is still less than 10%. So I think the adoption, to me, is the key, and the local ecosystem development is the key.
Gurmeet, do stay on. We just want to quickly get chatting with the management of Info Edge. Now, Info Edge stock price is up close to about 3.5%. The company's top line growth has improved. Revenues on a quarter-on-quarter basis are up 5.2%. This is the highest growth rate that we've seen in the last 8 quarters. That's 2 years. And on a year-on-year basis, the company's revenue growth stands at 9.5%, and standalone billings too have gone up by 10.8%, which suggests that perhaps this 9, 10, 11% kind of revenue growth will sustain in the subsequent quarters. We have with us the management joining in to talk more about how the individual verticals have also fared. Margins, though, remember, have declined a bit on a sequential basis on account of higher ad spends on account of IPL. Hitesh Oberoi, CEO and MD of Info Edge, is now with us on the show. Hitesh, afternoon. Thank you very much for joining in. Good quarter. There is a recovery seen in your main core business, Naukri, and even the other businesses are doing well. Your cash losses from non-recruitment business have also come down on a year-on-year basis. What can you guide for Q2, Q3, Q4? What is it that you're seeing on the ground?
You're absolutely right. I'm pretty happy with the performance last quarter. Our non-recruitment businesses particularly did very well. So we were able to reduce our cash losses. Growth was also reasonably high. We were able to grow most of them in the mid-teens or more. In the case of the Naukri business, which is our main business and which generates all our EBITDA, growth is slowly coming back. The worst is perhaps behind us. IT hiring, which was very slow for about 5 or 6 quarters, it's slowly beginning to pick up. Some green shoots there. April and May were actually very good, but perhaps there was some uncertainty around the elections in June, which resulted in a slow quarter towards the end. But our jobs peak index, which we publish every month, which talks about how job listings, etc., are doing on the platform, was up in July. So fingers crossed, and let's see how things play out going forward. It will be hard for me to say what will happen next quarter, but clearly we're targeting more growth, higher growth than Q1 in next quarter.
So Q2 growth should be better than Q1. Your cash losses from non-recruitment business are down to 16.5%, down 73% on a year-on-year basis. What are you targeting here, say by the end of FY25, Q4?
We have three non-recruitment businesses in our operating portfolio. There's Shiksha, there's Jeevan Sathi, and there is 99 Acres. Jeevan Sathi had a particularly good quarter. We were able to get it to near break-even. And this business was losing about 30 crores a quarter 2 years ago. From there to almost almost breaking even. It's been a very good performance in the matrimony business, and we are hoping to keep it at break-even levels going forward. In Shiksha, growth was very strong, and Shiksha now generates a profit. It generates cash on a quarterly basis, and we are hoping that we can grow it, continue to grow it at least 18-20% going forward. 99 Acres also, we have managed to reduce our burn significantly over the last 18 months. It still loses a little bit of money, but we are growing quarter on quarter. Our traffic share is growing. The usage of the platform is growing. The real estate market continues to be buoyant. Of course, in this business also, we saw some uncertainty in the month of June. Perhaps it had to do something with the elections. But the real estate market continues to be reasonably strong, and we're hoping that growth will, 99 Acres will also grow faster going forward. Let's see, fingers crossed.
Can you turn cash profit from your non-recruitment business by the end of, say, 3 quarters? Is that possible?
Well, I mean, we would want that to happen, but whether we'll be able to make a profit or not will also depend on how aggressively we want to invest in these verticals going forward. Clearly, like I said, we will target break-even in Jeevan Sathi. We will target to make a profit in Shiksha. But in 99 Acres, a lot will also depend on competition and competitive intensity. And if we see an opportunity, we will not shy away from investing more in the business. And if that means that profitability gets delayed, I mean, that's so be it.
All right, so you are looking to invest in a lot of these businesses, etc. Hitesh, just before we got to you, we were talking about some of these new age companies as well. Zomato was one of those conversations, one of those stocks that came up in the conversation. I'm looking at your market cap. Your holding in Zomato is now nearly a third of your market cap. With the kind of investments that you've lined up for all the other businesses, etc., and the kind of surge that we've seen in Zomato, does it not tempt you to maybe take some money off the table in Zomato, use that to fund these investments? Is that on the cards?
Well, all I can say is if we had taken our money off the table 2 years ago, 3 years ago, 5 years ago, and we've had this discussion several times, then maybe it would not have been such a high percentage of our market cap, right? Because Zomato has, sort of surprised everybody. They have executed to near perfection, and they have a huge opportunity in front of them. And we believe in the management team. They are clear leaders in the markets they operate. So why sell something which is doing so well for you? But having said so, ultimately the board decides, and whatever the board decides is what we will do. But we don't want Zomato to be 1/3 of our market cap or 30% of our market cap or whatever. We would want to grow the operating businesses much faster. It's not that we want Zomato to go down, but we want the operating business to grow faster so that they can become a large part of our market cap.
No, the reason I ask this is I'm not saying that you sell entirely and exit and don't look at the upside, etc. But as a proportion of your market cap, it has continuously increased because of the outperformance that it has shown, and because you don't want it to be that big a proportion of your overall market cap, it may tempt you to take some percentage off every once in a while and use that to grow the operating profit of all your other businesses as well.
The truth is that we are sitting on 4,500 crores of cash, or close to that number. And the Naukri business generates about 1,200 crores of EBITDA every year, right? And our other businesses are now close to breaking even. And like you said, hopefully they will start turning EBITDA positive soon as well. So, unless and until we find good use of the cash, there's no point in sort of selling Zomato, which is executing well anyway.
Hitesh, many more questions, but out of time now. We look forward to another conversation. Thank you very much for joining in. That's Info Edge for you. Perhaps the worst is behind Naukri. The non-recruitment business is also growing very well. And for now, they're going to hold on to that golden goose, the goose which is laying golden eggs for them. That's Zomato. The stock moved up post numbers. It's currently up close to about 4%.
Right. I'm not sure whether we still have Gurmeet with us. Gurmeet, you heard the management of Info Edge. Things seem to be turning around for them. They are generating cash in their core business. Other businesses on the verge of breaking even. Would you look at this as an opportunity?
No, I think the numbers are pretty heartening. I think especially Naukri showing traction and losses getting contained in Jeevansathi and other businesses getting close to break even. I think that's heartening. You made that point with them on Zomato. I think their acquisition cost was about 1.17 rupees. And I think the stake today is almost 15,000 crores. It's fantastic valuation. So this is also one way of playing, let's say, a Zomato and a policy bazaar if you want to, which is the holding company play and then, the startup play. And then I think I'm pretty gung-ho on Naukri with the focus the budget also has on job creation and, the skill development. Because, as we grow, we need to provide for that. So if they can demonstrate traction, so a lot of the schemes like using the CSR money for internship, a lot of focus of the government on formal job creation. This recruitment, vertical could be really in focus. It's just that in this market, everything is so, high on valuation that you got to probably play the waiting game. So I would probably wait for some corrections to get into it if I get any. But yeah, when it was some 5,000, I think it was really a very juicy price level to enter.
Chole Bhature comes via Zomato, or it's made at home, or what is it? Which is a special outlet, Gurmeet? It's long due.
Always have it fresh, Nigel. Prefer going in person. It becomes too soggy.
I believe you're coming for a CNBC Awaaz show towards the end of this month. So 3 of us, you have 3 people who are waiting, and looking forward to that, Gurmeet.
100%.
Yeah, I think Gurmeet's new tagline is that don't talk about Ola, tell me about Chola.
Thanks a lot, Gurmeet. Wishing you a good weekend ahead, and Mangalam's given you the tagline as well. So we look forward to meeting up with you towards the end of this month as well, and the Chole Bhature. All right, well, it's a little bit of a short break. You come back, we'll get chatting with Tushar Pradhan on the other side. Stay with us. welcome back. Well, we're keeping an eye on the headline index, and the Nifty is trading in that very, very close to that resistance area of around 24,400. The broader markets are having a big party, actually. Pull up the intraday chart of DCW. The stock is up 13% as we speak. Reliance Infra as well. The stock a few days ago had corrected from around the 220 mark all the way to around 190 rupees. That one's moving on very, very large volume. So these are some of the top volume movers. Even HCC has resumed its uptrend, and majority of that 3% move that we're seeing on HCC has come, in fact, in the last few minutes. Pull up Reliance Infra as well, stock at the high point of the day. So plenty of movers. KFIN, the stock is up 15% now. One of those, financialization themes. Big up move is what we're seeing on that one. Tushar Pradhan, director at Hexagon Partners, joins us on the show. Hi, Tushar. Good afternoon and good to see you in. How are you feeling about the markets? At the start of this week, there was that scare that everyone got. People are talking about, we have seen this before and this is the start of something. Till now, at least it hasn't played out. What's your guess from here on? We go through a bit of a time-wise correction, or do you believe we could be bracing for a sharp price-wise correction as well?
Yeah, so many questions in that one question. So I'll try and attempt, coming to some view on what I have looked at in the past and how things are looking right now. I think 2-3 things need to be clarified. You have to understand that the India market currently is going on a lot of liquidity, and which is domestic liquidity. While the international liquidity does cause a lot of volatility in between, you have to understand that this domestic flow continues to hold the market up no matter what. Now, what we actually saw last week, or even just this week as we speak, is due to the fact that the interest rates in Japan caused a flutter in the carry trade, and the bigger impact we saw in the US markets, where a lot of this carry trade was actually executed. India, being a very small part of the overall, carry trade as a percentage in any case, should not have been affected. But the sentiment is what got us as well. And that's what happens to markets. Now, if you look at the unwind, which has happened in the US post the interest rate increase in Japan, that is more or less over. I think 2/3 of the carry trade has already been reversed and the losses taken. And as we've seen in the last couple of days, the US markets have rallied very smartly. As a result, I think the India correction, or whatever it was generally just a response to what was happening globally. There wasn't anything locally to suggest that there is a very sharp correction due. The credit policy came and went. There was no change in terms of the view. There was some hint of a hawkish nature to the statements, but I think that was very rational, because if you're talking about 7.3% GDP growth, then there is no reason for you to cut rates at this time. And on top of that, if you are having an issue in terms of collecting deposits as it is in the banking system, then interest rates cuts are not going to do any of that for you in any case. So I think the case being done, the event having passed by, I still don't think that there is any reason significantly to expect a correction just because we think the markets have run up. I think that's the view that I have right now.
All right, so you're not expecting a correction just because the markets have run up. We'll speak about valuations in just a bit, Tushar. Meanwhile, while we were talking, we also had the numbers of Berger Paints flash by at the bottom of your screen. Looked not particularly bad. In fact, there was a 2% revenue growth that compares with other players. Asian Paints had a 2% revenue decline. Kansai Nerolac had a 1% revenue decline as well. So in that, a positive growth is something that the street likes. Yes, the EBITDA did decline. But remember, at the same time, last quarter was the best ever EBITDA margin that the company had recorded. So they had an element of high base. Thereafter, there was some price cuts that the company took and also increased their spends on advertising. Ever since then, the industry has announced price hikes to the tune of 2 to 3%, so that should hold margins going forward. The most important internal this time around has been, while the volume growth has been double digit, the market share that the company has seen in terms of an improvement is the highest that they've ever seen in this quarter itself. So that should assuage some concerns of market share loss for number 2, number 3, number 4 players in the event of a big competition coming in from the likes of Birlas as well as JSW. So Asian Berger Paints, as a result of which, currently has moved higher despite a decline in the EBITDA and profits. A 2% revenue growth is better than the industry, and they've gained market share the most that they have in this quarter itself. Tushar, your thoughts on some of these consumer names? While we've seen them rally over the last month or so. From a year-to-date perspective, or for the last 2 years, they haven't seen much in terms of a move. There's been more of a time correction, valuation correction as well. Do you like any of these staples ahead of, expected recovery in rural consumption?
So I think the question is, again, I would break it up in two parts. Do I like those companies? I absolutely love them. Simply for the fact that you have an economy like India, where it is just starting to, reach this kind of distribution for consumption of, these goods and services at a level at which, it's going to explode from here on. So do I like the longer term prospects of these companies being in the business? Absolutely, yes. But as you mentioned, in the last 2 years, most of these companies have been trading on an average between 50, 60, 70 times, take a pick, in anticipation of this continued growth that we will see. So on one side, you have to understand that the growth will continue, no matter what we do about it. Sentiment will drive what would you like to pay for them. And typically, a good company may not make you money in the stock markets. While the reverse may not absolutely be true, sometimes it is true. It is all about the valuation that you think is attractive given the potential, rather than it being a good company, rather than it being in a good sector, rather than it being a sector which is favored because of tremendous order flow, rather than being in a sector which is absolutely solid in terms of how the execution will come in the next 2, 3, 4 years. The key question is, what price do you buy them? So I think these are two different parts of the question I will answer. So I think one of the observations your question itself had was that, is there a time correction that we have seen? So yes, clearly. So in spite of pretty significant margin improvement on the back of some price increases, these companies have taken slightly better environment in terms of rural demand, which we should expect to start kicking in some time from now, and the overall demographic situation not having changed. So in the long term, I don't think you're going to miss something along the way. But what is the cost of waiting? The opportunity cost of being in good companies, quote unquote, and then waiting for them to kind of kick in because their overvaluation will then correct over a certain period of time by time value is a difficult prospect to keep. So I would think that as a portfolio allocator, and if you're building a portfolio, I think you should definitely keep some defensive. And then these are the stocks which start doing well the minute there is crisis in the markets elsewhere, as we've seen. So it's a good, soft kind of defensive play to keep in a portfolio. But to keep thinking that, is that going to be the driver for my return in the next few years? I think the valuations are telling you another story. So that would be my take.
Do you want to tell us in terms of sectoral allocation in your portfolio? What would you recommend now? What is it that you're comfortable buying?
So I've been saying for some time that manufacturing and industrials are areas which are of a lot of interest to me. But again, here the spectrum of valuation is pretty wide. So when you look at the typical MNC industrials, they are again in your 70s, 80s stratospheric Ps. If you look at even middle-level engineering companies, manufacturing domestic, they're still fairly expensive compared to their longer-term averages. So nothing really jumps up at you. But there is a fairly largest number of companies, which I would call mid-caps, which actually are in a supply chain going into the OEMs, or I would call the larger industrial companies. And I think that is where the opportunity continues to be, because it is a little bit like the auto story. So you can have the OEMs, which will have a certain rate of increase, but the auto ancillary companies will actually have a greater party, if you wish, if you can identify one or two which have not caught the valuation bug, and you can play that like there. So I think infrastructure, manufacturing, industrials would be very much part of my favorite list as of now. But again, within infrastructure, I think there is an entire supply chain, and I've been through that cycle once to know that there are companies which supply the infrastructural companies, there are infrastructure companies, and there are infrastructure financing companies. So I think one can take a choice across there. The growth is pretty solid for the next 2 or 3 years there. I think across the spectrum, you will get some opportunities both in the services area. So I think technology is something that we should keep looking at, and not because of what happens to the US economy per se, but I think within there are some select plays which bring out some nuance of the technology play overall. So I think that might be something to look at. But again, valuations don't support you largely on an average there. So again, we'll be fairly circumspect there as well. I think the chemicals, specialty chemicals and the pharma space, I think again gives us a fair bit of opportunity to look at. Within that, I would still look at chemicals and specialty chemicals a lot more closely. I think the overall trends where the crude oil prices are largely more or less in control. We are not expecting a huge global economic uplift to bring oil prices up. So you have raw material prices which will remain low. And then the demand for specialty chemicals and derivatives will continue to be very strong, especially for India, including the China Plus story, China Plus One. And I think that is where some of the attractiveness will continue to be. So I hope I've given you a fair idea of what kind of sectors we like right now.
Good speaking to you as always, Tushar. Appreciate you joining in and giving us your reading of the markets. Wishing you a good weekend ahead. We look forward to having a chat with you in the coming weeks. But let's focus on the stock of the day. Ola Electric, well, it's made its debut on the exchanges today. The stock listed at a premium at around 76 rupees, but from there on, the stock is flying away. Sonia joins us to fill us in with a quick analysis on that one. Sonia.
Well, thanks a lot for that. It has indeed been a very strong listing for Ola Electric. Debuted at 76 rupees. Now it's 20% higher. As we know, Ola Electric is India's largest electric two-wheeler manufacturer and has now hit the Lal Street, which means it is India's only pure-play electric two-wheeler manufacturer to be listed on the exchanges. Now, Ola has the highest market share currently in the space. Its market share as of June 2024 is 46.2%, which is much higher than the second best player, which is TVS Motor, that enjoys a market share at 17%. If you look at the financials as well, Ola Electric has seen a good growth in the last couple of years on the top line. The revenues have grown 88.4% in FY24, standing at a little over 5,240 crores. The company is yet to make a profit or a break-even, so the company has reported losses for the last 3 years. Specifically in FY24, the losses have been to the tune of 1,580 crores compared to 1,472 crores in FY23. Now, with this IPO and listing, the company intends to use 1,600 crores of the net proceeds for investment into research and development purposes. It's looking to expand its product portfolio, move from scooters to electric bikes as well, and it may unveil a plan of its electric bike on the 15th of August. The bigger story here is this, that the electric two-wheeler industry in India is very underpenetrated at the moment. Barely 5% of the two-wheeler market is electric currently, so the scope of growth is large. Even if you look at it, the two-wheeler industry growth-wise is expected to grow at a compounded rate of 11% over the next couple of years and expected to hit a target of $35 to $45 billion by FY28. The management is also focusing on cost cutting. In the recent interviews, Bhavish Agarwal has talked about how they are producing lithium cells in-house in order to cut their costs, and he mentioned that by manufacturing these cells internally, the company aims to eliminate 25 to 30% margin charged by external suppliers for lithium cells. So good listing coming through. Let's see how the next couple of days pan out.
Okay, day one has been exceedingly strong, 20% up on Ola Electric. Earlier this week, we also had a chat with the founder, Bhavish Agarwal, who spoke to Ritu Singh on his plans for the company and the state of EV penetration in India.
This Ola Electric story is a story of India's future. We are building India's future supply chains, India's manufacturing, India's future products, and our ambition and mission is to really build India's leadership on the global stage. So the fact that the street has liked our story and liked what we do, like the price, is a very strong positive. Price will move up and down. I'm learning the ways of the market. And we will keep doing our work. We'll keep focusing on building good business, building strong products, good products, building a sustainable business also, and hopefully creating wealth for investors in the long term. The broader story that's playing out here is the penetration story of electrification of EVs in India. 3 years ago, when we started, almost to the day, EV penetration in two-wheelers was almost zero. Now it is 6-7% overall, and within scooters, where all the action has been over the last 2 years, it is 15+%. And the scooter penetration month on month is only going up. 2 years ago, the government used to give 60,000 rupees in FAME subsidy. Now they give 10,000. And the industry, not just us, but the whole industry has adjusted very well. They've rejigged the cost structures, and the industry continues to grow with reduced FAME. I believe this is the way of the future. Slowly, the incentives will taper down as companies become more stronger in their supply chain and their cost structures to be able to deliver profit margins with probably no subsidies in the future.
Stock of the day there, Ola Electric locked upper circuit 20%. Slip a short break, come back, we'll get you an insight into dealing room chatter, and also we'll get you some trading picks. Stay with us. Welcome back. Well, one stock that's got wings in the last few minutes is ABFRL, Aditya Birla Fashion and Retail. Stock is up 3%, 1.5% of that move coming in the last 6 to around 8 minutes. So a big spike up on that one. But as promised, Nimesh is standing by to help us out with what's he sensing in D-Street Chatter. Well, Nimesh, good day for the market. All's well that ends well. And that seems to be the case. Tell us what you're picking up.
Oh, absolutely, Nigel. You know, just 2 days of consolidation and we have bounced back pretty sharply in today's market, largely led by auto and IT names. But there, I believe it's more of short covering as well because of the last 2 days of, bit of correction in those sector stocks. So in terms of flows, again, it's a mixed day of trade. I've been saying this for a while now that, it's even students between FIs and DIs in terms of flows and all. While the bigger indices are up 1%, the breadth seems to be quite mixed, and there is selling as well in some select stocks, especially the cash market stocks. So that trend of selling in the cash market stocks continue for the second day running. A word on Nifty Bank. It's been in the green today, but today's rally in the Nifty Bank is led by the PSU bank stocks post the RBI policy. But in general, the feedback is that while we've seen a pullback rally, there is selling pressure in the broader market stocks from larger FIs.
All right.
What about individual stocks, Nimesh? What have you picked up from dealing rooms?
Well, a lot of mid-cap names are buzzing in trade today. So the first name is Jubilant Ingrevia. A big move in that stock, up 7% in today's market. But off late in general, the stock has been buzzing as well, big volumes as well. I understand some HNI investors are active as well. And the Citi is anticipating a large order win for the company from a global giant very soon. So that's the buzz as far as Jubilant Ingrevia is concerned. The second name is Updata Services. Again, a mid-cap name, but buzzing in trade today, good volumes as well. I understand a leading HNI investor is quite active buyer, and hence a big move in that stock in today's market. The third stock is Orient Cement. This is interesting. There was a lot of interest in the Birla Group stocks of late in the cement names, but in the last 2 days, the stock has shaved off nearly 10% and under pressure in today's market as well. But in general, the flows have been quite strong from larger HNIs, and the street is anticipating a corporate development in Orient Cement very soon. So watch out for the potential deal in this company very soon. And the last is Power Grid. Within the PSU name, this is one stock which stands out today, largely on back of buy flows. So expect high delivery volumes, and looks like some larger FIs are again looking to buy Power Grid at these levels.
All right. Thanks a lot for that, Nimesh. Let's get in the tomorrow trade or the Monday trade now. Mitesh Shakkar joins in. Mitesh, it's a Friday afternoon. What would you buy or sell today for a reverse trade on Monday?
Mangalam, Coromandel, I think, is showing very good strength and is now at the day's high. So that's a buy with a stop at 1664 for targets of 1750, and a BKST and ONGC with a stop at about 329.5 for a target of 339.
Thank you very much for that. Some of these PSUs are seeing some buying. So NTPC, Coal India, even State Bank of India. PSUs, these are stocks which are up 1.5%, 2%, and some buying has emerged in the last 10 minutes. Wockhards' net loss has narrowed very significantly, 14 crore of a net loss in the current quarter. Revenues are up 15%, and the stock is now up 4%, moving up very sharply. Let's talk about Cochin Shipyard. That's a stock which is up nearly 3%, came out with their Q1 numbers, good set of numbers, further fortifying that 250% gain that it's seen since the beginning of the year. Upasana joins in now with the analysis on these numbers. Upasana.
Thanks so much for that. Well, the company's reported strong set of numbers, and the beat was largely driven by company's ship repair segment. Now coming to revenues stood at 771 crores with an uptick of 62% on a Y&Y basis. EBITDA also expanded 1.2x times at 177 crores, leading to EBITDA margin expansion from 17% to as high as 23%. PAT stood at 174 crores with an uptick of 76% on a Y&Y basis. Now coming to company's key segment, that is shipbuilding segment, which is nearly 68% of the overall sales, recorded a revenue growth of almost 62% on a Y&Y basis, but margins in this segment dipped around 180 basis points at 17.5%. Now, ship repair segment, which is nearly 32% of the overall sales of the company, is where the growth lies. The revenue growth was about 63% on a Y&Y basis, and margins sharply expanded from 24% to as high as 43%. So all in all, strong set of numbers coming in from Cochin Shipyard in its Q1 FY25.
All right. Thanks a lot for that, Upasana. That's about Cochin Shipyard. We also have Himang Jani joining us now. Himang, you've heard about Cochin Shipyard. There have been a bunch of stocks which have been in the news today, right from Ola to Trent to Cochin Shipyard now. What is it that stood out in terms of a stock in trade today for you?
Clearly, Trent is the one that really stood out because of the way the company is delivering for almost now 2 years, and more so the way they've ranked the retail formats, the categories. I think every time there is a sense that the company is expensive and at this price, whether it makes sense, but the way they're delivering both in terms of top line growth, the margin, the category addition, I think it has surprised everybody. So I think that is something that surely stood out for us.
Everyone is also how strong Ola Electric's first day has been, 20% gain on that. There is no doubt there is a lot of headroom for EV penetration to go up from current levels of just about 5.5%. of the overall two-wheeler volumes. But there is still a question mark on who will eventually do well in this race. Ola Electric has a first mover advantage, but even the other companies like Bajaj Auto, TVS Motors are making strides, making investments in this particular to grow this portfolio. Your thoughts on Ola Electric after this 20% up move? Are you surprised with the strength that it's seen? And how would you play this two-wheeler, EV portfolio?
Yeah, so the response to the IPO was not that great, but I think the listing was surely blockbuster. So typically, when we look for any investment opportunity or the theme on which we are working, we tend to avoid these kind of newer companies where the market cap is as high as about 40,000 crore, and when there is a longer term story. Instead, I think it makes more sense to look at some of the incumbents like TVS, which is a 40% of the scooter portfolio overall, and very decent product offering in terms of EV also. So I think rather than paying a 40,000 crore and such high valuations without any visibility or profitability for next 2-3 years, it makes more sense to go with something like TVS or a Bajaj Auto, which have a very stable and better kind of a product offering in the same category.
All right, Hemang, we need to ask you a few more questions for the time being. We'll take that mandatory break. We'll come back. We'll do some further analysis with Hemang, who's waiting by. Stay with us. Welcome back. Markets holding steady. 7 minutes to go. We have Hemang Jani who's still with us. Hemang, I wanted to ask you about Orient Cement. Nimesh just told us that the street is anticipating that there's going to be some kind of corporate development. The stock is corrected 10%, by the way, from the recent peak. The street sniffing a deal on the cards. Mr. Ketrabal tells us he doesn't know about it. What's your take at around 330 rupees? The asset is good, mind you. Well, what's your take?
Yeah, so the asset is good, 8.5 million ton capacity, about 5 odd million ton clinker. And now that both the big brothers are out on a buying spree, Adani and Mr. Birla, at some point people would start talking about possibility of an M&A play. The timing is something that you really can't put your handle on. But I do think that somebody who has a, let's say 6 months, 12-month kind of an horizon could look at it as a M&A play, as an event or a special situation kind of a idea. It's not cheap, by the way. It's about $100 per ton valuation at this point of time, and for an 8.5 million ton capacity, that's a fair value. So not much of juice, but given the way the deals are happening, where they tend to pay about 25-30% or maybe more premium. If that happens, then there can be some sort of a re-rating. 30-40% upside is possible.
All right, 30-40% upside is possible if there is any deal, etc. I just wanted your thoughts on Berger as well, because Berger reported numbers just an hour ago, 2% revenue growth. The EBITDA declined on account of a couple of factors. The company in the same quarter last year had a very good base, so beating that would be difficult. At the same time, they've spent a little more on advertising, they've reduced prices, etc. as well. So the good part is that they've gained a lot of market share, and positive revenue growth is actually better than what, say, someone like an Asian Paints or Kansai Nerolac have reported this quarter as well. The stock, understandably, up around 2.5%. Your thoughts on Berger and the paint industry?
So Mangalam, numbers were okayish, more or less in line. At least on the revenue front, there's a small surprise. OPM a bit softer. Typically, these companies have kind of underperformed the broader market or the indices because of the entry of a larger player like, Grasim. And also the fact that on the urban side, the volume growth has not been up to the mark. So both Asian Paints and Berger, we would avoid. If we want to play the consumption story, we would go with something where there is a clear visibility of growth, like you have some of the retail players, Tata Consumer, Britannia delivered a 7% kind of a volume growth. So I think we should go with some of those companies.
Right, speaking about some of those retail companies as well, you spoke about some of the staples. Trent, we spoke about just moments ago. AB Fashion and Retail, the stock is an F&O ban, so it'll be very interesting to see what happens to that one. I'd done a piece, Trent versus ABFRL. It was about 3.5-4 years ago, where both of them were at the same market cap. Now, Trent has moved around 7.5 times since then. ABFRL, of course, has moved about 60-70 rupees in the last few months or so, but still that valuation gap between the two is only widening. So maybe some on the street are looking at that narrowing. The stock is an F&O ban, so impact cost would be a lot higher as well. But do you track ABFRL? Have you looked at these numbers? What do you think one should look at in terms of future for ABFRL?
So Mangalam, ABFRL continues to look attractive, but when it comes to delivery and performance, somehow it is lagged behind, and you don't see any meaningful, catch up in terms of performance, particularly when you compare it with something like Trent. So while it looks great in terms of pedigree, in terms of the formats and the valuations, I would still prefer a Trent because you can clearly see how they are able to outperform, quarter-on-quarter basis.
All right, there it is, a 45% up move in this year itself for ABFRL. Compare that to Trent, which is a 100% up move. And if you look at the last 2 years, Trent is up nearly 400% and ABFRL by and large flattish itself. But let's talk about another company that reported an inline set of performance. That was Bharat Forge. Their defense revenue surged about 150%. Margins expanded as well. So non-auto parts of the business doing extremely well, and that explains why the stock is high by 2% as well. We spoke with Baba Kalyani, who's the chairman and managing director of the company. Let's hear out the excerpts of that conversation, and then we ask Hemang about his view here.
Expand our Indian manufacturing. That is the whole idea of the fundraise. We believe there is a huge opportunity to increase Indian manufacturing. So we want to increase our manufacturing footprint in different states in India. There's a lot of opportunity. There's a lot of growth potential within the country, and a lot of, let's say, business that will come from places like Europe and North America into India. So we need to create much more capacity, and a lot of this is in different kind of products. The CV business by itself is a little slow because of all the headwinds that you see in Europe and beginning to see in the United States. But overall, I think next 2 years, the CV business will bounce back because that is when the emission change will happen and there'll be a lot of pre-buy. So we expect next year and year after next to be a boom year in this business. I think you will see the subsidiaries to be profitable next year. We will continue to make progress, so you will see continued progress quarter on quarter on these subsidiaries.
All right, Hemang, quickly, your view on all these names, defense names, Bharat Forge in particular, and anything that you like from there?
So yes, from a defense perspective, Bharat Forge could be an interesting, story because of the way the company will shape up the, business model in terms of different products. So next 2 years are going to be extremely good. But on the auto components part, I think the triggers are lacking. So if I want to play pure defense, I think Bharat Electronics remains one of the better plays because of the way they are delivering and the overall product portfolio that they have. But I'm not too bullish on the entire, railways and defense because that entire theme has played out too much. Now you have to be selective and you have to time your entry in a better way.
And that point, thank you so much, Hemang, for joining in. Wish you a good weekend. You've thrown light on a lot of these stocks. In the dying minutes of trade, we had Insecticide India numbers coming up for you. Stock up 8% after what seems like a 70% jump in profit. May have been led by EBITDA margin expansion as well because the revenue has grown just about 2.5%. Net profit up 70%. The stock up nearly 8%. It's been a good week, especially from where we started, how it appeared at the start of the week. We're ending with just about minor losses. So we thought that, this could be a very rough week for the bulls with the kind of handover that we got at the start of this week itself. But we bounced back pretty smartly and ending about 1.5% for the week for the Nifty and, for the sensex as well, similar amounts. For the Nifty Bank, it has been slightly weak, so down about 1.7% for the week. The last day of the week was pretty strong. 250 points on the Nifty, 800 points on the sensex. Mid-caps doing a tad better, along with the Nifty Bank as well, gaining about 0.2%. The top gainers today, we had Eicher Motors doing extremely well, ONGC doing extremely well as well. From the broader markets, the stock of the day, the two stocks of the day were Trent and NBCC. NBCC on that order win, Trent on the back of strong numbers that came by. On the way down, we had Alembic Pharma, which was down by about 6% as well. And then we had the stellar listing of Ola, which opened absolutely flat, but thereafter piled onto the gains and ended about 20% higher. So good end to a wobbly week. We end the week with about 1.5% lower on the Nifty and the Sensex, but that could have been much worse had the global weakness continued for the markets in the whole. With that, we wrap up on this edition of Closing Bell, but you don't go anywhere because on the other side of the short break, you have our Friday special Editors Roundtable coming up next.